Bitcoin saw one of the most explosive days of 2023, resulting in a move to $30,000 on the release of fake ETF news pushed by certain social media accounts. This news, later deemed to be fake, resulted in a significant correction in the market, wiping off over $150 million collectively across liquidations on longs and shorts, not to mention the hundreds of millions of dollars worth of losses incurred on standard positions. One of the most brutal days in cryptocurrency we have seen, but in today's video we're going to be discussing the impact of this, what it all means, how the charts are looking, and so much more. Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the recent price action for Bitcoin, the explosive rally followed by the subsequent correction, wiping off $180 million in the market. We'll be discussing the short-term price action, the daily and weekly charts, and of course the technical data. By the end of today's video, you should understand exactly what is happening and of course what to expect. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, you can join our trading channel. We post trading setups of exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. We've had 16 trades in the VIP this month. We've had 15 wins and 1 loss. If you're interested in joining that with over 620 members, including access to our group chats, our general chat, our trading chart and education chat, our news chat, our video chat, our trader setup chat, and of course our help chat, you can contact me in the pinned comment of the free channel to get more information on how to join. Let's dive into the video, guys, starting on the market data. How are we currently looking? So like we said, guys, a massive day for cryptocurrency, some huge volatility, all perpetuated on a reportedly fake bit of information. That fake bit of information was detrimental to the market, pushing the prices aggressively upwards, followed by an explosive correction downwards again. And this, of course, was the fake ETF application approval news. And we saw a massive rally, and we saw the news again, the ETF approved down over here, pushing the prices up aggressively. And not too long after, we found out that ETF news was fake, again pushing the prices all the way back down, actually lower then where the news came out, again liquidating a whole bunch of long positions and a whole bunch of short positions in the process, totaling around $188 million in liquidations, up 253% in the 24-hour period, 136 million in shorts and 52 million in longs. In that singular 30-minute candle, we saw $72 million in long liquidation, short liquidations, and 32 million in long liquidations. An absolutely brutal time in the market, actually one of the most brutal days we have seen for cryptocurrency for quite some time. Alongside that, 24-hour volume is at 113 billion. This is up 198% for the last 24 hours. Again, we do generally see volume rise when volatility starts to step up a little bit. So all in all, guys, brutal stuff, and we're discussing this a little bit more in today's video. Moving over from there to take a look at the volatility index. Again, we're not really expecting too much of a change on the 60 and 30. It will take some time for this actual volatility to account, but we can see the 60 has dropped a little bit over here, and of course on the 30 we have seen the 30 push up a little bit again. We do expect it to be a little bit more delayed, so watch that over the coming weeks to see how the volatility index is reacting. Moving over to the DXY has broken back down from this rising channel formation. Again, we had this overall uptrend. The uptrend has now broken down, developing a short-term downtrend. The short-term downtrend is respected as per this trend line. Therefore, if we want to see the DXY push back upwards, we will need to break back above this diagonal trend line. Until then, we expect a correction down towards our 50 EMA, and if the 50 EMA is lost, we expect a correction towards this local area of support, which is going to be around 104.5. So overall, DXY looks a little bit bearish on the short term and looks like it could see a correction. Moving over to the S&P 500, it does look all right over here. Again, we have held that weekly candle above this high time frame support, and again, if we do close that weekly candle below that support, that will indicate a correction lower is expected. Until then, we are in an overall uptrend and we are expecting a move back to 4,500 on the short term if we can break back above that 50. If we fail to break above the 50 and we lose this local low, we then expect a correction back down, potentially to 4,200. So right now, looking neutral, but looking slightly more bullish. The same goes for the Dow Jones over here. We have broken above this bullish trigger point on the daily candle. It would be great to see a daily candle close above this 34,150 level to push the prices back upwards. Again, this area is still testing as resistance, and we do need to see how that daily candle reacts. If the daily candle closes below that red line, we could see a correction back down, similar to what we saw on the S&P. That is it for the market data. That is it for the broader markets. Let's dive into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Now, there is a lot, and I mean a lot, to discuss. Bitcoin has done one of the most crazy 24-hour candles we have seen for a long time, and it's very hard to even talk about this just because of how sporadic it's been and how volatile and really how manipulated it's been, right? We saw a very mainstream, very trusted source of news for cryptocurrency post a fake announcement saying that, again, an ETF was approved when it wasn't. It resulted in a significant rally. Now, there were signs to tell us and indicate that this potentially was fake. Again, we didn't expect any ETF news yesterday. In fact, on the 17th is when we expect ETF news. So the ETF news, first and foremost, came a day early. That was a big red flag. Number two red flag, again, we saw that the market rallied aggressively during that, but prior to that, we saw a lot of suspicious aggressive spot bidding and bearish absorption moving into that rally over the weekend. Now, a lot of you probably think, what the hell does that mean? What it means is there was a lot of wash trading occurring on exchanges to artificially prop the price up while big anonymous orders on the spot market were filling through, meaning there's potential indication that someone knew this was going to happen, or it was worse, potentially even planned. And if it was planned, that means the news was paid for. And if it was paid for, it means the entire thing was manipulated and a plot against retail investors, because we already know retail is hellbound, attached to the market sentiment in regards to an ETF approval. The people who are controlling this are aware that retail is emotionally attached to that decision and will rapidly and aggressively make decisions based on that. There was an expectation that the ETF was going to be approved at some point, so people fell for that trap very easily and they put a lot of money into it, getting absolutely destroyed. It was a perfect trap and it was played out and set up, I believe, completely intentionally. And this is what I always say, guys, avoid news events. It doesn't matter if it's a bullish news event or a bearish news event. You should 100% always avoid news events, as you are going to be always the last person reacting to news. Everyone knows about the news events before retail. The institutions, the big money, the exchanges who facilitate the purchasing and selling for the big money, right? The exchanges facilitate the purchasing, therefore they know the buying and selling actions of the big money. They allow that to go through over the counter, meaning it's not even on the order book, so very much aware in advance what is happening. So exchanges sometimes work with these big companies, big institutions, and they wash trade their own books. They set up large sell walls, right? They've set up large buying walls. I'm going to go ahead and bring up a clip really quickly, guys, of the buying walls on Binance as Bitcoin broke through 28K. You can see over here on the left, we had, so I'll go ahead and rewind it again. You can see over here on the left, it's a little bit blurry. We had over here a 175 Bitcoin. This is a $4.9 million sell wall. You can see it over here, sitting at 28K. Just as that ETF news came in, you can see this wall gets absolutely deleted. It gets removed from the order books completely gone. It didn't get executed. It didn't get filled. That wasn't a buy order. It was wash trading, meaning the exchange puts up these artificial buying and selling orders, okay, to influence people's decisions to either add upward buying pressure or selling pressure to the market before they want that market to move. So again, a prime example of completely illegal activity when it comes to trading. Wash trading is a very illegal activity that was done on exchanges. And it makes me believe that exchanges were aware of what was happening. They knew it was coming. Now, this is all speculation. Don't hold me to it. I've got no clue at the end of the day. We can't prove anything. But looking at the buying and selling patterns over the weekend, looking at the large, anonymous, and very sporadic spot orders that were coming through, aggressive spot orders, it almost seems too much to be a coincidence that this news was just randomly faked and we saw such a bullish reaction. But we're going to leave it there, guys. We'll discuss about the price action. So currently Bitcoin is pushing above that 28K resistance. Now, we do have some key levels of resistance here. Like we said, 28K was that main one. We said if we break above 28K, we would see a volatile move. And it's very hard to sit here and say, oh, well, we called it, because again, no one could really see this coming. But what we can say is we've always expected this 28K to 28.4K level to be a trigger, right? We've said for weeks, if we break above this level, we're going to see a large burst in volatility like we saw over here. And when we break below it, we saw a large burst in volatility downwards over here. So we knew this was going to be a trigger for overall volatility, which is exactly what we did see. The big question is now, because this move was driven on speculation and more or less fake news, will it have the substance to hold? And number two, what does it mean? Did we break through critical levels? Are we still testing resistances? So we'll answer the easy one first. From a structural perspective, we are looking okay. We are above the 28.4, we're above the 28K level. So we'll tick that off. But from a technical perspective, we have to take a look at that trigger point. The trigger point of where we see high time frame strength come back is still going to be the upper band of the Gaussian channel, like we've been saying for weeks. The upper band of the Gaussian channel is currently sitting at a price point of 28,508. And therefore, that is the point we need to close above on the weekly to indicate a significant shift in strength. So we've got the 50 EMA, we've got the bull market support band, we've got the 28 to 28.4 level. As of right now, that could fail to hold, but we do need to break above that upper band of the Gaussian channel on the weekly to signify a shift in direction of price action. Until then, guys, momentum is still moving down, okay? We are still at this level of resistance. We have to be cautious, particularly because the price moved in a matter of fashion of which it did, which was an artificial explosion in price perpetuated by false news designed to manipulate retail decisions and liquidate large leverage positions, okay? Be very, very careful with this kind of stuff. So be objective, be realistic. From a technical perspective, we have ticked off 2 of the 3 requirements for the weekly chart to be bullish. Number 1, the 50 ticked off. Number 2, the bull market support band ticked off. And number 3, the main one, the Gaussian channel upper band has not been ticked off yet. And therefore, we need all 3 to say we are in a weekly position of strength for the price to continue upwards. While we do not have that, we could definitely see this area act as a level of resistance, and we could still see a rejection from here down towards the 27,600 level if we do reject. If we remain above this level, that is going to be fantastic. We will see a continuation upwards. We'll discuss this in a short term a little bit. So moving back over here, guys, if we do zoom out again, and we're going to talk about the high time frame right now just for a second. If we zoom out once more and bring up, let's go 3-day chart and bring up our VRPV. If we go to the 3-day chart and bring up the VRPV, we can see a few things occurring, right? Number one, according to the VRPV, which is going to be our visible range volume profile, it takes the volume of historical orders on a horizontal scale and charts it on the right-hand side of the chart. We can see these volume chunks, which indicate, again, areas of liquidity and gaps in liquidity. We can also see trends or volume trends based on where the price is moving and how much resistance we have stacking up as the price moves up or dropping as the price moves down. As we can see over here, above 32,000 is when we really start to kick it off. Particularly, a move above 32,000 will very likely push the price to around about 38 to 40,000. This is kind of the best range we're moving. So we get above 32,000, we're looking for a move into this range. We break above 40,000, what we can see here is the VRPV starts to drop off again to 46, meaning if we break above 40, we're looking for 46. Again, guys, for that to occur, we need to see that monthly chart flip bullish, and for the monthly chart to flip bullish, we need that monthly candle close above 32,000. So the next 15 days are going to be very, very big. If we get the next 15 days close above 32,000, that will trigger the continuation upwards, likely to 48,000 over the high time frame. But guys, still, resistance is resistance until it is not. This is a major trigger point. Although we've seen an explosive move up on the short term, although we've seen this great move, which is great to see, guys, but the way of which it happened wasn't great to see. We like to see natural price action. We like to see steady price action, not sporadic explosive price action happening in a second and done in a second. We don't like to see that kind of stuff. It's not good for the market. It's not good for money. It's not good for anyone really, unless you got lucky and you jumped in before a random news event, okay? Which a lot of people did. Thankfully, I made a decent amount shorting from the top over here. I lost a fair bit on that long, on that pump, but again, impossible to predict that kind of stuff. It's just random. It just happens sometimes. But 32,000 is still an area of resistance. For us to become macro bullish, we need to break above this level. For us to enter a bull market, we need to start getting above this level. Until then, this area is resistance. So let's go ahead and talk about the short term, guys. What is happening on the short term? Bitcoin has developed this overall uptrend. We'll zoom out a little bit so you can see. Right, we've entered a high time frame level of resistance. This level of resistance is going to be the resistance point which we just talked about, the 28 to 28.4K level, but of course it is also going to be the area of untapped liquidity as per that last high point. Remember the last ETF pump we had over here? This was back on the 3rd of October, about 2 weeks ago. We saw an ETF pump. We created a local high over here. We had not come back to retest that until now. We've actually come back and retested it. This could be a double top formation. We have dropping momentum here, guys, on the hourly. We have price at resistance. We have the 26.5 to 28.6, sorry. 28.6 to 28.5 level acting as a temporary resistance, which is going to be the Gaussian channel up a band. If we take a look at the smaller time frame price action, we can see even further over here. We have a uptrend that is developing. This uptrending trend line, as per this black line we'll draw it in, can be seen as a short-term level of support. If we fail to remain above this level, we could see a short-term rejection, right? We could see the price action pull back a little bit. Now, it's very hard to say how low we're going to go. The price is very unlikely to drop aggressively unless we clear out this range over here. If we take a look on the VRPV once more, we can see a humongous gap, which is sitting at 26 to 27.2. So 27.6 to 27.2, okay? This gap over here will be filled if the price drops below this level. So right now, we're in an uptrend. If we lose this uptrend, expect to move to the 50, expect a potential correction down to 28K. If we lose 28K, expect a correction to 20.6. And if we lose 27.6, expect a correction to 27.2. Again, if these levels start to be cleared toward the downside, the charts on the daily are going to become more and more weak. They're going to start looking pretty bearish again, so watch out. Now, I wasn't actually going to make today's video because I wanted to give the price action some time to develop, see what was happening, but we decided to jump in here anyway and just talk about it. So I want to give this advice. In the next 24 hours, you should remain aware, you should remain cautious, and most importantly, guys, don't feel pressured to trade. These conditions right now are not ideal. The best thing to do is to watch what is happening, observe what is happening, and wait for opportunities to fall into your lap rather than trying to claw and drag out opportunities from the market that might not exist. That is when you're going to make bad trades and emotional decisions, right? Keep your head screwed on. Understand that you are a trader. You don't care what the price is. You could not care less. You care about the percentage change of the asset after of which you bought or sold. That is it. If you entered a long, you care about the percentage change upwards. If you entered a short, you care about the percentage change downwards. The price of the asset doesn't matter. If you are an investor, then the price matters. To the investors out there, if you FOMO'd in on this rally, reconsider your life decisions. Really, I'm being genuinely serious. If this rally made you FOMO in and you felt like you were going to miss the bull market, you have to reconsider how you're trading. Zoom out. Where is the high time frame trigger point for the bull market to start? It's not 28.4k. It's not even 30,000. It's 32,000. Okay. If you've been following our channel for a long time, you would know we were bullish down here, guys. We bought all the way down here. We're accumulating Bitcoin in this range, and we accumulated Bitcoin over here. We sold our Bitcoin off. We sold our Bitcoin off into shorts. We are telling you right now, we are not looking for a macro continuation upwards until this level is cleared. All we have seen, okay, if we draw out our range over here, this is our range. We have seen a consolidation within a range. We have seen a break of the trigger point resulting in a large surge of volatility, and that is it. If we actually objectively look at what is happening, not enough has happened from this rally as of right now to impact the charts in any significant way, okay? Remain objective, remain honest, and of course, most importantly, guys, remain informed of what is going on. Thanks for watching. Catch you guys in the next video on Thursday. Cheers.